Welcome to Trading Lounge and the US stocks for the 22nd of June. Now, today we're going to be covering the General Electric, Nike and Atlassian. So, starting with the daily chart here for team. And we're looking at, well, a wave 4 here that it's getting a little bit complicated here for this, but we're looking at it as an A wave here, an A and a B and a C wave here for wave B, and then down for wave C here. So we could short this if we wanted to, if you're up to it, but let's just have a look. So just on the hourly chart here, we're looking for 1, 2, 3, 4, and 5 for 3, down for the A wave, then the A, the B, and the C wave here for this. And we do have a nice impulse wave here, which makes the nice wave C here. But I'm always concerned about this particular spike when I see spikes come down here, and I have to use that spike to lay out a particular wave count here, because if that spike wasn't here and most of the volume had traded through, nicely through here, then this would be the low here. Then that would just leave that as an impulse wave, and then the 50-60% retracement level would come in quite important in this particular instance. Well, this gap here and also this number here to the 172 there will play out as the support area here. So I'll just refine that to its correct place. But look, if the 72 here becomes the resistance, then you can look to short it down at that point. We were looking that if the market, for whatever reasons, if I had the wrong wave count, if the 180 here became the support, then we would look for the long trade at that point. But that support there would need to be a classic trading levels pattern there at that. But otherwise, we were pretty much on track here, looking at this roll over here after completing that 5-wave structure there. So I'll just tidy that up and we'll leave that as it is. But yeah, I think we'll just change this to half a position if you're thinking of doing this, because well, here. So here we'd want to see if I can just remove this here. What you're looking for here is a classic trading levels pattern to the downside. So we'll see the arrival, the reaction here may drop a bit below that first, but it'll certainly come back up. But what we just really want to see this here come down below the level and retest it, and then fail at that point, and then move down from that point. So you need that first low below the level, then you need the retest here, then you stick your entry, short entry, just a point under the low there. I mean, like if it's at 170, then you would expect to bounce off that anyway. So you just want to drop it down, below that, and make the 170 become the retested resistance as well, and look to add there. And I'd certainly lock in some percentage profit it's only a short-term trade. This, well, that said, anything can happen. We may see even further downside, but taking a small percentage at the 165, unusual number, but it's the lower end of group 2, so we should lock in a bit there for that here. And of course the stop here can go, once you've got that high here, once that's been retested, then you can put your stop there for that. So I'll just pop that in there. Okay, so we'll leave that at that. I'll just save that there. And the next stock we can look at will be Nike. So bear with me for a second. Let's find Nike. Okay, here we go. And we'll just go out to the daily chart here for this. No, we're not going there. We're going to the 4-hour chart. And so the 4-hour chart here, we've been from the low here, we've been counting up as 5 waves, pretty much in line with the S&P and the NASI. So 1 and 2 and 3 and 4 here, and then looking for wave 1 here, and then an A and a B and a C, which can bring us back down to this point here. So yeah, anyway, pretty exciting. We are currently short in this. We never looked at, never found support on the 100. So we're looking at this being 5 waves down here for the A wave and the B wave pulling back. So we're leaving the stop above there, and we're currently short at the moment. So we can move this out of the way here. I'll just delete that, and then we can bring our stop across to this point. I just want to leave it there for a while, and I'll just clean this up here because I can't put too many things on the platform. There's a limit to what I can put on, and when you've got a lot of charts happening, you've got to manage your mess. So now with this here, we should see, just generally speaking, a rule of thumb. So this level, this move to here roughly, then we should expect to see that at minimum to here. So our target is down at the 90 area through here, and yeah, we'll just certainly take profit at that there. So what we'll do is we'll just put a little TP there to remind us that that's what we spoke about. Just really getting from one number to the next number. Of course, the 95 may play out here as some support area, so you just need to be mindful of that. The levels here, and well, they're 8 in here, 5, and then 3. So you can expect to bounce off 3 as well. So if you wanted to take any profit down at that space, then that's where you'd be there. And then we've got 2, and then we've got 1 here. So I won't put those in, but 1, 2, 3, 5, and 8, they'll all play out in their own little way. You could also take a percentage at, which is not such a bad idea really, taking a percentage at the 93 there. So I'll just save that, and we're going to look at General Electric next. So go. So I just want to go to the monthly chart here. Now, this is the monthly chart going back to the .com days and so on, and obviously we're in a downtrend here, but it can be counted as an A wave here, because as an A and a B and a C wave here, we've got this move back up here. So it's not like we can count it down as 1 and 2 and 3 and 4 and 5 here, because of overlapping wave structures. That this degree of structure is just not on. We could also play this out here as putting the A wave here and then having an A and a B and a C wave here, but it still leaves us with the B wave here, so it doesn't really matter. The main point here though is that the current move down that we have here is in 5 waves, so we can count 1 and 2 here and 3 here and 4 here and 5 here. So we can have a low in place, as I've discussed before, but you know, saying, you know, after a monstrous trend down, you know, from over 20 years down, and saying, oh, that's the low there, you know, we need to be a little bit careful about that. And of course, it can continue to trend down because we are seeing impulse waves to the downside here. But I think it's just sort of interesting, you know, from where we are with this. So I don't know if the weekly's okay. So the weekly comes in at wave B here, then wave 1 and 2 here, 1 and 2 and 3 and 4 and 5 and third, ABC for the 4th here, and then the 5th wave here. Now, the 5th wave here is quite short compared to wave 3, but the extension's in wave 3. So as a rule of thumb, wave 1 and wave 5 will be roughly the same. So I can't prove anything at this particular stage. We were looking at, we're looking for a move, corrective move back to this level here, and then down again. So it could be down for 1, back for 2, down for 3, and so on. So, you know, we would definitely be looking to go short, let's just say just through here, we would definitely be looking to go short, but obviously we can get a better position than that as well. But just pointing that out there, that that would be the breach of that, and we would see a deeper move to the downside, even though I think the 61.8% was quite close to this situation here. Well, 50%, 61, I thought, yeah. So that's okay. You know, it's okay to look at that as all of wave 1 down here and back for wave 2 at that point. So that's possible for that to play out like that. Now, so the question is do we have wave 5 low in here? Or do we have this as just wave 1 here? That's what we need to work out. So we really need to look at both sides and play that out. I mean, also too, this could just be up for 1 and back for 2 here, or still just an A wave and a B wave and a C wave. So there's a lot more work to be done here, but let's just rack things out a little bit. I don't know where that spike's come from. It's not really on the intraday market here. So let me just go to the 4-hour chart here. So no, it's not there. So I'll just stay with this. So another way to look at this here, the move down here from wave 4 is 1 and 2 and 3 here, an A and a B and a C for wave 4 here. That's possible, but I would need to see the market sitting under the 650 here as the resistance at this point. So otherwise we can just count this up here as wave 1 and back for wave 2 and then moving higher from this point. So I can't resolve this just yet here, but if it's with all the other markets, then we'll just see the A, the B and the C wave here, find support on here and then move up from that point. But we just don't have enough evidence for any of this just yet. So we're just going to have to leave this particular stock alone for a little bit until we see more price action. Alrighty, thanks for tuning in and thanks for the support. Cheers.